Hi, my name is David Klossing. I'm a criminal tax defense attorney and a CPA. I handle straight civil audits all the time. I like to handle enough of them the government is always guessing what type of case I'm handling, whether there are criminal implications to it or none. I try and keep that ratio at about 70% straight civil and about 30% criminal. I always want to keep them guessing. By criminal, I mean there is non-compliance in those returns that if the government knew that it was purposeful would amount to a tax crime. It's called income tax evasion. Well, this is a question I get all the time by people who are shopping for representation. There's all sorts of stuff out there on the internet that says, hey, don't hire an attorney to represent you in an audit. You're sending the signal you've committed crimes. We can help you with this problem, and don't hire an attorney, hire us. Well, first of all, I can't tell you how bad advice that is. For the past 15 years, I've been attending the ABA Crim Tax seminars in Vegas, put on by the ABA, and I'm trained to deal with these issues, where a lot of these guys aren't. They just want work in the off season, and they don't care if you go to jail. It doesn't impact them any. I care. It hurts my reputation if you go to jail. Number two, my job is to keep you out of jail. All right? So let's talk about the types of audits that might have criminal exposure. First of all, there's three different types of audits. There's a correspondence audit, an office audit, or a field audit. In a correspondence audit, they just ask you to mail in proof. It's done at a distance. Those are usually low risk. Okay? In an office audit, they want to have you come in person, and if you own a business, bring all the records for that business, and they go through line by line on that return, and if they find problems with that return, they're going to open up other years, and there's always the potential that they find a pattern of behavior that says, hey, you're cheating on your returns, you're not just an idiot that did a bad job preparing those returns. All right, let's get into more scary forms of audits. There's something called an eggshell audit, which I deal with probably 30% of the time. An eggshell audit is where there's a pattern of behavior in your return filings where you've been understating taxable income either by hiding income sources, overstating deductions, claiming personal expenses as business expenses, claiming credits you're not entitled to. Bottom line is the government's not getting paid the proper amount of tax. If the government knew you were doing this with willful intent, they could criminally prosecute you. Here's an even scarier version of an audit most people haven't heard of unless you're trained in criminal tax defense like I am. It's called a reverse eggshell audit. This is where there's a parallel and simultaneous civil and criminal investigation going on at the same time, and it's disguised as a clandestine civil audit. So your preparer will have no idea that's going on. You'll have no idea this is going on. Someone at the IRS suspects fraud, usually out of an abusive transaction unit. They'll send in an auditor who may or may not know the full story, but they have directions to look for certain things, and what they're looking for are called badges of fraud, and we'll get into that. What makes these audits so dangerous is that the government's using them more and more and more because they're so effective. Imagine the two ways they could criminally investigate somebody. Up front, using the Criminal Investigation Division. Well, the way that usually works is they do it in the background. You don't even know what's going on. After 2 years, after they have all the answers to all their questions, after they have all the proof that fraud has occurred, they approach you usually at 5 o'clock in the morning when you're walking out to your car to go to work. You're half asleep with soot in your eyes, and they'll have 6 years of tax returns in one hand, and they'll tell you something like, hey, if you just talk to me, I'm sure we can clear up any misconceptions, and I'm sure that's just a misunderstanding. Let's talk about why these returns are off. And oh, by the way, let's read you your Miranda rights first, so I can use this in a criminal investigation against you. Miranda rights will say something like, you have the right to an attorney before you talk to me, and most people, the headlights will come on and they'll just end the conversation right there saying, you know what, I'd like my attorney present. Well, if they bring you in for an audit and you don't know you're being criminally investigated, you're not likely to do that, and you're also very likely to bring the original preparer with you. Well, they love it when the original preparer is there because all they know is they have a fraudulent return in front of them. What they don't know is how much participation your preparer had in that. Did they aid and abet your criminal income tax evasion? Are they a partner in that crime? Or are they a potential victim of your behavior? Did you give them a cooked set of books? Therefore, a fraudulently understated return, guess what? They're going to turn on you because they have to protect their own reputation so they can continue to earn a living, which means the very person you took with you is the one who's going to bury you. Okay, well, also preparers aren't trained in protecting your Fifth Amendment privilege against self-incrimination. In other words, I might tell you, you're better off in this situation, just have nothing to say. Claim the Fifth. Okay, they're not trained in that. Or they're not trained in the Fourth Amendment privilege against unreasonable searches and seizures. What documents do you have to produce? What documents do you not have to produce? Well, why does the Criminal Investigation Division or the IRS prosecute in the first place? Well, they do it for the deterrent effect. If they stick someone in jail for tax fraud, it tends to make others not want to commit tax fraud. The scariest fact of all is that if the IRS Criminal Investigation Division targets you, they have a 90% conviction rate. As good an attorney as I am, I've managed to save people in that situation a couple times, but the odds are really against me. 90% conviction rate. How does the IRS go about conducting an audit? Well, the approach they all use, every single auditor I've ever dealt with in my 30-year career, I call it a take it to cash approach, right? No matter what your books and records say, here's their thought process. Any deposit into any account that you control, whether it be a business account, a personal account, a retirement account, an investment account, is income unless you can prove otherwise. Now, there are non-taxable sources of deposits. My job to prove it. If you borrowed money, that's a non-taxable deposit. If you inherited money, that's a non-taxable deposit. All expenditures, on the other hand, are considered non-deductible personal expenses unless you can substantiate the deduction to the government's satisfaction. How do you do that? Well, you got to give them proof of how you paid for it, whether it be check or cash or credit card or debit card or PayPal or any of a multitude of payment methods. How did you pay for it? And then number two, can you give them a receipt that details what was paid for? If you go to Home Depot, even though you're a contractor, they don't know whether you're fixing up your own home or a client's. They need to see a receipt, and they might want to trace it to a specific job or a client. You have to give an acceptable explanation of why each one of these expenses is ordinary and necessary to the type of business you're running. And believe me, that leaves a lot of room for judgment in the mind of the auditor. Here's a list of badges of fraud right out of the Internal Revenue Manual. The Internal Revenue Manual is really aimed at IRS personnel themselves, and it's a resource for them to refer to in their training and daily operations. Right? Here's what they're taught to look for concerning your reported income. Are you understating reported income? If you're omitting entire sources of income, all right, you have 3 businesses, you're only filing returns on 2. Doesn't take a genius to figure out you're cheating. If you're unable to explain substantial amounts of income identified as received, okay, they're seeing large sources of income coming in. How about they find a safe in your house and it's full of cash, okay? Or they found an account that you didn't associate with your business, a slush fund with a bunch of money in it, or investments. Any type of income they can see coming in that you can't explain in the way of here's how this ran through my tax return, you got a problem. If you can't explain huge increases in net worth, especially over a period of years, that's a badge of fraud. If you're not able to explain sources of bank deposits that substantially exceed your reported income. This is a thing I've seen done in every audit. It's called the bank deposit analysis. They take every deposit to every account they can identify and they add up the deposits. Then they look at the income items on your return. If the reported income doesn't come up to the same number as what they can see running through your bank accounts, you got unreported income. All it takes is $10,000 of unreported income to bring a technical fraud advisor into a case. Their sole job is to work up the case for a potential handoff to the Criminal Investigation Division. If they take the case, 90% conviction rate. If you're unable to explain large deposits of cash or large expenditures of cash, either direction, if you can't account for your cash, you got a problem. Those are badges of fraud. If you're failing to deposit receipts into business accounts, and that's your established practice, you got a problem. Every time I get cash, I'm parking it in a safe or I'm spending it personally. It's never hitting the bank accounts. When they find that trail, they're going to call that a badge of fraud. If you fail to file a tax return, especially over a period of several years, despite the evidence substantial amounts of cash received or substantial expenditures, badge of fraud. If you're cashing checks at a check cashing place and misrepresenting income, you got a problem. Here's the badges of fraud they look for concerning expenses or deductions. If they can prove that you're claiming fictitious or substantially overstated deductions, you got a problem. And I can tell this happens all the time. You complain to your preparer you're paying too much tax. I've seen a lot of preparers just go back in and say, okay, I'm going to give them a little bit more of this, a little bit more of that, a little bit more of this, a little bit more of that. Underlying it is your actual deduction, but what they puff it up by, you won't be able to prove. And if that happens all over the income statement, that's going to look like fraud because it is fraud. If you're running all of your personal expenses through your business, in other words, all of your grocery shopping, all of your trips to the vet, all of your medical expenses, all of your vacations, all of your toys, and deducting that as business expense, that's fraud. Matter of fact, it's double stated because it should be taxed to you once as income, but then you claimed it as a deduction, so $50 is really a $100 sin against the government, at least as far as taxable income goes. If you're claiming dependency exemptions on non-existent, deceased, or self-supporting persons, that's fraud. Okay, here are the badges of fraud concerning your books and records that the government is well aware of and looks for. If you keep multiple set of books, or worse yet, keep no records at all, that's fraud. Do not ever get in your head you can take them a shoebox of receipts and say, you guys figure out how much taxable income I had. What they're going to do is disallow all your expenses across the board, hit you on only the income they can see, and then issue a 90-day letter, in which case all you can do is go to court to battle with them. Okay? That happens, call me, I can deal with it. If you fail to keep adequate records, if you hide records, you pull an Arthur Anderson when you get audited and shred all your records. If you flat out refuse to make records available, those are all badges of fraud. If you make false entries or alterations in your books, false journal entries, if you use backdated documents, post-dated documents, if you produce false invoices, if you make false applications for loans, if you make false statements or other false documents or applications, those are all badges of fraud. Even if not necessarily related to your taxes, it still attacks your character. When they go through an invoice book and they're irregularly numbered, unnumbered, or altered, badges of fraud. If you make checks payable to third parties and then endorse those checks back to you and then cash them and try and claim a fictitious expense, that's fraud, badges of fraud. If you intentionally over or underfoot cash journals, in other words, you make intentional mistakes that wind up reducing your tax income, they'll figure that out. If you've got amounts posted to your general ledger that are not in agreement with your books and records, you got a problem. If you start recording income in a slush account and not hitting your books, that's a badge of fraud. Okay, when you're in an IRS audit, they are watching your body language, all right? 70% of communication is nonverbal. It's how you move, the expressions on your face, whether a bead of sweat goes down the side of your face, whether something's twitching as you're talking to them. They're picking up on all of this. But here's the behavior that they typically associate with fraud. If you make a bunch of distributions to false partners out of a partnership, okay, you're picking up 100% of the income, but you're sending 40% of it to a person who really doesn't exist to take a 40% haircut of your taxes. That's fraud, not hard to prove. If you make a false statement regarding any material fact during an examination, that's fraud. Matter of fact, that's a separately chargeable crime. You cannot lie to a federal agent. That's a felony in and of itself. If you attempt to hinder or obstruct an investigation, all right, you just flat out fail to answer questions, all right? You repeatedly cancel appointments or reschedule appointments. You refuse to provide records. Worse yet, you threaten potential witnesses. You hassle the examiner, or if you, worse yet, assault the examiner, oh, you got problems. If they can prove you failed to follow the advice of an accountant or a return preparer regarding your original return, you got a problem. Matter of fact, that's one reason you don't want to take your original preparer with you and do an audit. If they can prove that your knowledge of taxes and business practices doesn't line up with what you did on your return, right? There's numerous questionable items on your return, but yet you seem to be a reasonable business person. That's a badge of fraud. If you destruct books and records, especially after an examination has already started, that's fraud. If you transfer assets for the purpose of concealment, or you divert funds, or hide assets from the IRS, especially in a collection scenario. I'll dump this in here right here. There are two types of income tax evasion. One that everybody's familiar with that we've been talking about up till now, which is purposely understating your taxable income, therefore underpaying your taxes. The other is, after you've been legally assessed, usually off your own returns, is taking steps to make it impossible for the government to collect. Okay, I'm going to give all my assets away. I'm going to sell my assets at $1 a piece. I'm going to not file returns anymore, or I'm going to cheat on my returns while I'm filing, understate my income. In other words, I have no income, I have no net worth, you can't collect from me, put me in currently non-collectible, when all of those are fraudulent actions. That's a different type of evasion called evasion of payment, also punishable by 3 to 5 years per count. If there's a consistent pattern over multiple years to not fully report income, that's fraud. The IRS will look at the following methods of concealment, either hiding income from being taxed on a return or hiding assets in a collection scenario, as badges of fraud. All right, if you sell something for $1 and it's worth $1 million, they're going to get you for a concept called inadequacy of consideration. Nobody in their right mind would do that unless they were committing fraud. How about if you are insolvent at the time of a transfer? Okay, that could be bankruptcy fraud. If you have assets that you place in other people's names, that's a badge of fraud. If you transfer nearly all of your property as a debtor to the government, that is fraud. Also to third parties could be bankruptcy fraud, especially where there's a close relationship between the parties in the transfer. In other words, you give all your assets to family, friends, business associates. Badges of fraud. If you make a bunch of transfers of your assets in anticipation of a tax assessment, you're getting audited, you know you're going to get hit with a huge tax assessment, and you make all your assets disappear, that's a problem. You're going to tax court, huge tax liability at issue, all your assets disappear, fraud. Especially if you maintain a concealed interest in property that's transferred. In other words, I'm selling you my boat for $1, but yet you keep using it as usual. That's a problem. If you make a transaction that's not in the usual course of business, okay, I clean houses for a living. I would normally get $500 a month for a house your size. I'm only going to take $50 a month, but I'm going to hide that other $450. I'm still going to charge you $500, but it's $50 the government can see and $450 they can't. When you have transactions surrounded in secrecy, badge of fraud. If you make false entries in your books, your transferor's books or your transferee's books, fraud. If there's unusual disposition of the consideration received for property, okay, I'm going to sell all my assets, I'm going to get fair market value for them, but then the cash from all those sales is going to disappear, the government can't find it, fraud. If you're using secret bank accounts to put income in, fraud. If you make deposits into a nominee's bank account, in other words, you're treating somebody else's bank account as your own, so the government can't find it, fraud. If you're conducting business transactions in false names, badge of fraud. If the government is trying to criminally convict you for fraud, there's two types of evidence. One is a lot more powerful than the other. The most powerful type of evidence is direct evidence of fraud. Usually this is your own admission, your own statements, your own representations. Those are direct evidence of fraud if they can prove they were fraudulent. It's kind of scary is anybody associated with your audit can make an admission of fraud on your behalf, whether they mean to or not. Okay, you take the original preparer in there. All of a sudden he finds out that you gave him a cooked set of books, that nothing's tying out to the substantiation. He may make a statement, you know what? This isn't the set of books he gave me originally. I don't know where this set of books came from. That's a badge of fraud. So my staff is trained not to make criminal admissions. Of course, I'm trained not to make criminal admissions. I'm going to prevent you from making criminal admissions. That's how you stay out of jail. You hire someone to take you through your audit that knows how to keep it just about money and not criminal exposure. Okay, if there's an absence of a confession, they don't have direct evidence. Okay, they have to go circumstantial. The staff of an audited taxpayer, somebody who works for you, can all of a sudden become afraid that they could also go to jail for tax fraud if they aided and abetted you in committing fraud. A bookkeeper, a corporate executive, a CEO, a CFO, any of those folks can turn on you to protect themselves. Matter of fact, they didn't save any taxes. They didn't have a financial incentive to do what they did other than keeping their job. Believe me, they'll quit the job and find another one in a heartbeat rather than go to jail for you. An innocent spouse claim can be very dangerous. All right, if your wife can all of a sudden get wind of the fact that you could potentially go to jail for tax fraud, she can make an innocent spouse claim, provide them all sorts of other evidence about your criminal behavior in exchange for a pass-on criminal prosecution. What she's also hoping for is whatever financial problems they come after you for, she gets to sidestep. In other words, you can collect from him, but not from me. The testimony of a preparer, very, very damaging evidence. Since the IRS often doesn't have direct evidences of fraud, all right? You don't admit to committing fraud, your staff doesn't admit to committing fraud, the preparer certainly doesn't admit to committing fraud. How are they going to establish fraud occurred in front of a jury? Well, they're going to resort to indirect evidence of fraud. To show that somebody is guilty of tax fraud or evaded his taxes, the government must show that whoever the perpetrator is at least attempted to evade his or her taxes. Usually the government will try to infer the mental state element of the crime by pointing to circumstantial evidence. What's circumstantial evidence? All the badges of fraud we've gone through. Circumstantial evidence need not consist of slam dunk type facts. For example, having your business engage in only cash transactions is not in and itself a fraudulent action. But when you combine this fact with other facts, it can become a negative one or a badge of fraud. One fact that's in the government's favor is a badge of fraud. Negative facts are called badges of fraud, or facts the IRS, franchise tax board, or any other taxing authority and the courts tend to equate with fraud and therefore run with fraud. In my opinion, the next three methods of proof are the strongest ways the government can prove to a jury that you committed tax fraud. One is the net worth method. Using the net worth, the government looks at your net worth at the beginning of the year, looks at the end of the year. The difference between the two is your increase in net worth over the year. And this figure is reduced by any non-taxable sources of income, like loan proceeds or inheritances. And then they compare this calculation to what was reported on your tax return. Any unreported income flows to the service. That's a huge badge of fraud. Then there's the expenditures method. Your net income is calculated by what would need to be earned to pay for the identified personal expenses or your lifestyle they've identified you living. For all you know, they followed you around for 6 months and they looked at the way you were spending money, how you vacationed, how you ate out, that you had a boat, that you had an airplane, that you were cheating on your wife and had a girlfriend, that you paid a place for her to live. All of this stuff can come back to haunt you. Wealth acquired during previous years is taken into consideration because maybe you were paying for all this stuff through accumulated wealth. Then lastly, there's the specific item method. This is where IRS agents and criminal investigation division agents attempt to prove that specific transactions or a set of transactions omit income, inflates deductions, or involves a source of income that is falsified. One good way to gauge how much risk you're at for them detecting your fraud is to look at the industry you're in, okay? The following industries have exhibited so much fraud in their tax reporting that the IRS has developed industry-specific audit guides to help auditors and criminal investigators find the fraud. What are the typical ways that people in this industry commit fraud? All right. Here's the industry list. Aerospace, architects, real estate professionals, car dealerships, the construction industry, dentists, retail businesses, entertainment industry, landscape companies, veterinary practices, and oil and gas. Artists, business consultants, child care providers, and attorneys also have industry-specific audit guides. To tell you the truth, most of the elements of a tax crime are really easy for the government to establish. The one that's hard for them to establish is willful intent, okay? Tax fraud can look a lot like negligence. It can look like you did a lousy job preparing your returns rather than committed fraud. So, Tax evasion is the most federally mandated and charged tax crime. Okay? Evasion of assessment, we've talked about. Evasion of collection, we've talked about. Under 7201, any person who willfully attempts in any manner to evade or defeat any tax imposed, whether it be an income tax, an excise tax, an estate or a transfer tax, is guilty of a felony. They'll face a fine of $100,000 as an individual, $500,000 as a corporation, and they face up to 5 years in imprisonment for each count, along with the cost of prosecution. That's what's at stake. That's why you should hire me and not go to your audit with your preparer. Okay, you've sat through this whole video series. Let me give you my final pitch, whether you should hire me, David Klossing, who's simultaneously a tax attorney and a CPA, and also holds a Master in Tax. First of all, we estimate there's 560,000 CPAs in the country, 1.1 million attorneys. We estimate only 24,000 in the country are both, all right? Of those 24,000, maybe 3,000 have a Master's in Tax or an LLM in taxation on top of those credentials. Okay, why would you hire me? Well, first of all, you have a conflict of interest with the original preparer. We've already hit on that. With me, you have attorney-client privilege. Anything you say to me, I cannot be forced to be a witness against you, either can any of my staff. Even my receptionist has attorney-client privilege. Work product privilege. Any documents we prepare in anticipation of litigation, privilege. They can't make us produce those. If you're one of the 70% of my clients that's just worried about how much additional tax penalties and interest they're going to be facing, and they're not really worried about criminal tax, well, the big advantage is if we have to file an appeal or litigate, it's much better to have an attorney along from the ride for the beginning. We're the best at that part of the procedure, and most of my audits resolve at the audit level because I'm able to push back for what I want, threatening litigation. Preparers can't. I'm specially trained in tax law. I'm trained in accounting. I'm trained in civil and criminal tax procedure. I'm trained in advocacy. I'm trained in civil and criminal court procedure. Most CPAs can't match that list. I have a winning track record. I have never had an audit client go to jail. You're not going to be the first, not if I can help. I've only had 2 clients go to jail in my 30-year career, okay? Both of those were under criminal investigation when I met them, and I told you they had a 90% conviction rate. And one of them stole about 40 refunds. The other one, about $1 million of employment tax that they didn't collect and remit. I've never lost in tax court. How do I say that? Well, I look at winning as whatever you paid me to litigate is less than what I saved you in taxes when I push the amount down from the original assessment to what we settled for. It's usually 2 to 3 times tax saved versus what you wind up paying me, and sometimes a lot more. I've litigated over 1.4 million and had a client pay 200,000 in a settlement. Again, 0 audits gone to jail for tax fraud. That's why you should hire me, so you can sleep well at night. Yes, it'll be more expensive, but you will come out on top. Dave Klossing, tax attorney, CPA.